Trump has undermined, the US on the world stage, and it's a belief that many share. But I'm curious, if there were to be a change in administration and Joe Biden were to be president, would the American people be absolutely certain and secure in the knowledge that there would be complete transparency about what's happening on the international stage?
Well, I think Joe Biden has shown nothing but transparency throughout his career and is committed to that in his administration, which is in complete contrast to the obfuscation and lies which regularly come from the Trump administration. But let's take a step back and really look at what Trump's foreign policy has been, which is cozying up to dictators, undermining our allies and international institutions, and actually abdicating U.S. leadership at the time that it arguably mattered most, which was coordinating a global response to the coronavirus pandemic. That was a time when the United States needed to step up and lead, and we didn't. What you will see from Joe Biden and his administration is protecting American sovereignty, reasserting leadership on the global stage, but doing it by leading with our values. This is someone who has decades-long experience in foreign policy and knows that we can't go it alone as a country, that we have to rely on allies and international institutions, but that America also needs to be a global leader in order to deliver for Americans on the issues that matter for them most. And this year, that's keeping them safe in the midst of a pandemic.
All right, we're going to leave it there, Lauren. It's great to have you with us. We appreciate your time. Lauren Baer is a former State Department advisor for President Barack Obama. Coming up next, we are talking to the CEO of the Mandarin Oriental Hotels about reopening his hotels amid a global pandemic. Stay with us. This is Bloomberg.
Hello guys, welcome again. Today we have the USD Japanese yen. Here we have the New Zealand dollar and the Canadian dollar. Here we have the Euro Swiss franc. Here we have the Euro Canadian dollar. These two are from yesterday. Yesterday we started trading these two, and as you can see here, we place our trade, and now it's here. And the Euro Canadian dollar, as you remember, we place a lot of trades, but we close them as the downtrend continues. Today we place here on this level because we know that this is the support level of the USD Japanese yen, and here we also place a trade because here on this level is the resistance level of the New Zealand and the Canadian. Okay, stay with us and enjoy this video.
Rebuilding in the fourth quarter, but I have to be honest, particularly in Europe and the Americas, the resurgence of the pandemic is meaning that progress towards rebuilding is slow. I think in Asia, we are seeing some good progress being made, but much less so in Europe and North America.
How many of your hotels are open right now and residences?
They're all open bar 2, whereas at the height of the pandemic, we had 3/4 of them closed.
So how are you pivoting the business? Are you preparing for a day when there will be significant business travel again, or do you imagine that it's going to be so long before that day comes that you need to do something else about your business model?
Well, my focus for the group has for some time been on leisure travel, and I believe at the luxury end of the market, leisure and business leisure has been absolutely at the heart of luxury travel. So I've been seeing business travel gradually declining as a proportion of our business for some time. And I think all the pandemic's done has accelerated that trend. So as a group, I would characterize us as focusing very much on leisure. Some 60% or more of our business would be leisure, about 20, 25% maybe business, and then 20% or so group. But that business segment is going to be slow to come back, and is going to come back particularly only, I think, in areas of the premium element rather than the volume of business travel.
Where have governments been the most helpful?
I think in Europe, there's been the greatest help, where there's been a lot of support for colleagues who've not been able to come to work because of restrictions actually requiring the closure of hotels or the significant fall in volumes of business. We've also seen significant help coming from the Hong Kong and Singapore governments and from the Japanese government. And there's obviously been some support from the US government in terms of increasing the payments that colleagues have received for a period at least. So those are the principal territories in which we've seen help from government. But in any case, in all cases, it can only go some way to make up the losses that we experience as hotel owners during a period when we're seeing occupancies into single digits.
Single digits, wow, that's really incredible. Can you give us an idea of what occupancy levels are in various regions?
Well, at the moment, they vary significantly, but what I can do is highlight that at the height of the pandemic, we got down to a point where we only had 200 guests globally. And as I say, we had less than 25% of our hotels open. Today, we're getting up to much better levels. So in China, we're up to normalcy and we're seeing 80 and 90% occupancy on a fairly regular basis. In a property like our Hong Kong property, our original Mandarin here in Hong Kong, we get up over 50% occupancy at the weekends and 20 to 30% during the week. And it varies then from territory to territory between those that are still in single digits because there is very weak and soft demand, or that those properties have a higher proportion of business travel, to others that are able on a regular basis to get into the 20s and 30s. But there are very few other than those I've named that are higher than that, with the exception of resort properties, where particularly in the Mediterranean, our resort properties have done very well over the summer.
Can I ask you about your New York hotel, since I'm based in New York? Do you imagine that that will return to 100% occupancy in 2021?
Well, it's never been at 100% occupancy, I would say, with a wry smile, but we have been able to obtain good occupancies in past years. And I think the question is, it depends what's going to happen in New York. At the moment, it remains a very challenging operating environment in which to work. And so, no, I don't think it will get up to normal levels of occupancy, certainly in the first half of 2021. What I have to hope is that going into the summer months, we see a sharp reduction in the impact of the pandemic in North America and in Europe, and that coming from that, we also see long-term remedies to the virus that enable people to travel again with confidence in the volumes that they once did.
I know that you were in discussions with O&MO about an alliance that began before the pandemic, and you decided to ramp it up and actually get it going during the pandemic. Tell us about the reasoning for that.
Yes, well, the Oberoi Group's a group that I've had a good knowledge of for some while. It's a very premium quality luxury hotel operation, primarily in India, though with properties elsewhere. And I have enormous respect, not only for the quality of the service they provide, but for the Oberoi family, who are behind the group and for the caliber of their properties. So I felt that Mandarin, without a presence in India, was a natural fit to work together with Oberoi, who primarily have their hotels in India, so that we can introduce our global guests to the Indian market through the wonderful Oberoi properties. And we can bring Indian guests who are familiar with the Oberoi offering to our hotels around the world. But the opportunity is not only to bring each other's guests to our properties and offer them the same position as we offer fans of MO, but also to enable colleagues to have a greater opportunity to move between properties and to be exchanging ideas and thoughts in terms of spa and wellness and food and beverage offerings that we have.
And that was Mandarin Oriental CEO James Riley. Amanda.
And Vonnie, there may be a big change afoot in the gaming industry. The world's largest casino company, Sands, may be looking to sell some properties in Las Vegas. For more on this, we welcome Bloomberg's Los Angeles Bureau Chief Chris Palmieri. And Chris, up to $6 billion, as we understand it, of combined assets could be for sale here. It does raise the question of the timing here and what the potential bidding would look like.
Right. Well, so $6 billion is supposedly Sheldon Adelson's minimum price. He won't sell it for less than that. We're talking about two giant casino hotels, the Venetian and the Palazzo, as well as the adjacent Sands Expo Center, which is a big prominent convention center there, right on the Las Vegas Strip. Very profitable properties in good times, but these aren't good times. Las Vegas is struggling. Visitors, volume, casino revenue this year is down around 50%. Having a hard time, in particular, with the convention business, which is really Las Vegas Sands' specialty. But Sheldon Adelson sees this in other ways as a good time to sell. Interest rates are very low. There's a lot of money sloshing around. Institutional funds looking to buy real estate. The overall casino business has held up pretty well, from a financing standpoint. They've been able to borrow a lot of money, and so if he gets his price, he'll sell.
Yeah, and I mean, it's overdetermined. You cannot lose money on a casino business, right, Chris? I mean, you can lose money on everything all around it, but the house always wins. So this is a very sort of unusual business that way, and it might be going at a discount, and there are plenty of funds out there that have been raised for distressed real estate and so on, Barry Sternlate among others. Do you see somebody like that trying to get in here?
Well, what we've seen recently is these partnerships of groups like Blackstone partnering with real estate investment trusts. There are a few of those who specialize in the casino space. So we've seen those where we have managers managing the casinos and other people owning the real estate and all kinds of very creative financing, which has allowed some giant properties to sell. The Bellagio, for example, earlier this year for $4 billion plus. So, there's been a lot of activity in the casino market in spite of it all.
And I guess on that front, there must be a lot of concern about the path of the pandemic here. Does that weigh at all on these kinds of transactions, or are people just looking past this to, whatever revenue was in 2019, there is a future ahead?
Definitely the buyers are going to be looking towards the future. Things are slowly coming back, but, you have to ask yourself, if one of the world's richest men is getting out, do you want to be getting in? Las Vegas will take probably years to come back to where it was.
Yeah, it's a little bit terrifying when you think about it. I mean, it's become less of a casino town and more of an entertainment town, Chris. That's part of the problem here, probably, right?
That's a big part of the problem. Those big, the discotheques and the pool parties and, the restaurants, the indoor, the Cirque du Soleil shows, all of that stuff is having a lot of trouble coming back. And the meeting business, which was a huge part of their business. Yeah,
indeed. All right, well, we will continue to follow this particular story, and it's an interesting one. Chris, thank you. That's Chris Palmieri, Bloomberg Los Angeles Bureau Chief. Let's take a quick check of the markets now before we head to break. We are seeing the S&P 500 just up about 0.1%, a lackluster day for two of the major indices, an up day for the Nasdaq thanks primarily to that $35 billion all-stock deal between Xilinx and AMD. From myself in New York and Amanda Lang in Toronto, this is Bloomberg.
just days away from the most critical election in U.S. history, and it's only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm Mark Crumpton with Bloomberg's First Word News. The record coronavirus surge that started with young Americans has now reached the oldest populations. According to the Centers for Disease Control, counties with the largest 65 and older populations now have an average 19 daily cases per 100,000 residents. That's 67% higher than a month ago. Now that the Supreme Court has allowed the Trump administration to end the 2020 census count, the Justice Department wants courts to stop interfering with efforts to meet a year-end deadline for turning in the numbers. Critics say the government doesn't have enough time to accurately finalize the data before then. The census is used to determine how many congressional seats each state gets, as well as the distribution of $1.5 trillion in federal spending annually. A setback for President Trump in the case of a New York advice columnist who claims he raped her 2 decades ago. A federal court has ruled the government can't be substituted for Mr. Trump as the defendant in a defamation lawsuit brought by E. Jean Carroll. If the judge had allowed the substitution, the case would have been dismissed because the government can't be sued for defamation. Carroll sued Mr. Trump after he called her a politically motivated liar. The United States is pushing for closer ties with India as that country faces a prolonged border conflict with China. Secretary of State Mike Pompeo and Defense Secretary Mark Esper met with top Indian officials in New Delhi today. Officials say they talked about ways to cooperate on pandemic response as well as challenges in the Indo-Pacific region. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It's 2 p.m. in New York, it's 6 p.m. in London, and live from Bloomberg's World Headquarters, this is Bloomberg Markets The Close. I'm Caroline Hyde.
I'm Romaine Boston.
And I'm Taylor Riggs.
And it's tech trying to push the U.S. higher at the moment. A major chip deal helps outweigh concerns about coronavirus. Amazon, Apple, Facebook all gain, but while the S&P, it struggles to bounce back from its worst loss in a month. That is financials and industrials drag. That chipmaker mega merger, AMD agreeing to buy Xilinx for $35 billion in stock. It's one of the biggest chip deals ever. Why CEO Lisa Su says, look, the purchase came in a perfect time. Her comments this hour. And the US goes all in on a vaccine. As cases rise across the country, the government puts the focus on treatments over social distancing, masks and testing. What we learned about those trials from today's pharma earnings. We discuss all that and so much more coming up, Renee.
Yeah, and a mixed bag here on Wall Street today. You're seeing the S&P 500 moving to the green here as we enter the afternoon and get into the last couple of hours of trading here, but there really isn't a whole lot of oomph to this right now. You do get a little bit of a bid coming into the big mega cap tech names. You see that reflected in the NYSE FANG Index, Apple, Microsoft, two of the names that are up pretty significantly here on the day, but you're getting some pretty big drags from pretty much everything else out there right now, particularly in the industrial space and in the financial space. You have some of those aerospace names that had dropped yesterday on the news of those Chinese sanctions, like Raytheon moving lower for a second day here. Raytheon down about 5%. Also a huge drag today from a lot of the big pharma names, particularly Eli Lilly. Some disappointing earnings and really some disappointing news on the progress on some of those COVID-19 treatments that had bid up some of these stocks as high as they are. You see where the 10-year yield is right now, Taylor, and of course, Bitcoin actually getting a bid today, up about 5%.
You want to talk about oomph? I'm going to give it to you right now. Take a look at some of the economic data we got this morning, Romaine. It is all about this Case-Shiller Home Price Index. Year over year, we're up 5.2%, the fastest rate of growth that we've seen. Some of these 20-city home price index that we've had going back since 2018. So that is some of the positive news that's underlying a little bit of that rally this morning. Flip up the board and let's just take a look at what's going on within the hedging space, because you talked about the fact that technology is still the defensive outperformer today against everything else, which sort of seems lackluster. Implied volatility to the downside, much more expected for the S&P 500 in blue, Caroline, relative to the NASDAQ here in white. There's much more defensive hedging there, certainly relative to tech. So tech, of course, again, proving to be the upside winner.
The upside winner, the stay-at-home trade, the defensive play before the elections, you name it, it ticks the boxes, Taylor. Let's get more perspective. Let's bring in Jimmy Chang, Chief Investment Strategist at Rockefeller Asset Management, who has over $10 billion in assets under management, a man who knows well the US-China relations. It's interesting as we set ourselves up for the US election. What's front of mind for you?
Good afternoon. It's good to be here. I thought it's interesting you mentioned the Chinese sanction against U.S. arms makers who were selling arms to Taiwan. I think it's just part of the broader competition between the U.S. and China, which is turning into a rivalry. We're trying to, the U.S. Trying to align with now India, Japan, Australia, amongst other countries in Asia, and certainly Taiwan is a very important piece. And so we have seen the U.S. government now allowing more advanced arms to be sold to Taiwan. And China obviously is not happy with it. But that said, it's really beyond the control of the U.S. arms makers, because these are contracts between governments, not a commercial contract. And as far as the market impact is concerned, Raytheon and Lockheed Martin don't really have much presence in China. I think the one that will be more challenged will be Boeing, which has the commercial aircraft business in China, but that's a very long cycle business. There's a large install base, which is difficult for China to move away from. So I do look at this more as a warning from China, but not with a lot of real consequence, at least in the short term.
Yeah, and the investor reaction seems a little overdone. I am curious here, Jimmy, too, when you talk about, I guess, the longer term prospects for companies in the aerospace sector wanting to do business with China, meaning Beijing here. Is there any sense here that Beijing would even have any other alternative to some of the products that are made by Boeing, Raytheon, et cetera?
At this point, if you look at a number of real high-tech industries where China is still lagging behind the West, aerospace is one of them. So I would anticipate for at least the next decade, China has no choice but to keep on buying Western, aircrafts from a combination of, Boeing and, Airbus and others.
Bring us back home here to the U.S. as it regards to the election and stimulus. And a lot of analysts were saying that stimulus was priced into the market. And yet the minute we don't have it, we took a serious tumble yesterday. Where are we in terms of stimulus being priced into these markets or not?
I think it's a timing issue. Most recognize that with the Senate having adjourned, they're not going to be, we're not going to have a stimulus deal before the election. Now, assuming, if Trump wins a second term, then there will be incentive before year end to have a more major stimulus deal. If Trump loses, we're not likely to have a major stimulus deal until Biden takes over in late January. And in the meantime, there may be something more targeted, such as, aid to airlines. But I do think, the economy needs additional support, especially in light of a potential second wave with the COVID-19 outbreak. So it's really a matter of time, and it just depends on the, everyone's horizon. If you have more of a short-term focus, that may be an issue. But I do think ultimately we will get something. But by the way, the worst combination could be a Biden victory with the Senate still being controlled by the Republicans. In that case, we may wind up with a smaller stimulus bill sometimes in January or February next year.
So putting some concern to how much oomph we get behind the economy going after the election. Jimmy, are you doing anything with the portfolio as senior portfolio manager ahead of the election, ahead of this uncertainty? Do you change anything up?
At this point, we are sticking to the prognosis that no matter what happens, the U.S. dollar is likely to weaken next year. Given that we are running up deficits, we are expanding the Fed's balance sheet at a much faster pace than other major central banks. And at the same time, we are somewhat optimistic that we can see light at the end of the tunnel with a improvement in therapeutics, especially with antibody treatments, and also vaccines coming sometimes in the first or second quarter next year. So we do believe that we are likely to have a move into value and cyclical leadership away from tech as the recovery becomes more sustainable.
Jimmy, always great to get your thoughts. I hope to have you back soon. Jimmy Chang, he's Chief Investment Strategist over at Rockefeller Asset Management. All right, coming up next here on the show, we're going to track all of those results out of the big pharma companies. Eli Lilly reporting earnings, Merck, Pfizer as well. Of course, investors really want to know the progress on those COVID vaccine trials. And then after that, we're going to get down into the largest chip acquisition ever, how AMD's deal to buy Xilinx could pose serious competition to Intel. And is working from home stressing you out? Well, Marriott, they have an idea for you. It's pitching their hotels to remote workers. All that and more coming up next. This is Bloomberg.
Before we came on air, we were talking about what a difference the November 3rd election could make. I was in the view that perhaps not much, given that Joe Biden seems to be as tough on China or on trade issues as President Trump. Will it just be the substance or the approach that will be different? What are we expecting in terms of these concrete tensions that we're already seeing flare up every now and again?
Yeah, thank you, Sherry, and good to be with you. I think there's going to be actually a big difference between the two. It's pretty clear that President Trump has favored a very confrontational, hostile approach, using tariffs a lot, going it alone against China, and even fighting some mini trade wars with many of our best trading partners and allies. He's been hostile to the multilateral system, to the WTO. I think Biden has clearly said that he thinks Trump's approach to trade has been a failure. He doesn't think the tariff war on China has resulted in much success. The overall trade deficit that Trump said he was going to get down hasn't shifted. We haven't really gotten fundamental reforms in China. And look at the latest figures. The U.S. GDP declined in the last quarter 32% on an annualized basis, and China's increased 6%. There's been some shift in trade within Asia, but it's really hard to say how the trade war has gotten very much. It cost U.S. consumers and businesses a lot. I think clearly what Biden will do is try to work more with our allies, which means he's going to try to bring an end to some of the tariff actions we took against Europe and Canada and Mexico and others. I think he's going to increase U.S. support for the WTO system, but push for reforms. And I think on China, they're going to have a strategic reassessment. They're going to figure out what is the best way to put pressure on China. I think it'll be less of a go-it-alone approach and more of a working with Japan, Europe, and other allies.
But when it comes to trade issues, Democrats have not necessarily been easier when it comes to those issues of protecting American firms, right? So the Joe Biden campaign platform has included preferential treatment for U.S.-made goods, list of subsidies to domestic industry. So I do wonder if the change will be more in approach, in the way that Biden goes about dealing with these issues, more than the actual substance.
Well, past Democratic presidents have actually been pretty pro-trade, Sherry Ann. I mean, it was Clinton who negotiated the WTO and NAFTA. Obama was pushing for a TPP agreement. Yeah, there's always been within the Democratic Party a lot of hostility. But, you know, the polling now shows Democrats are more pro-trade than Republicans. It's the Republican Party that's actually had a major shift towards much more protectionist, nativist, kind of economic nationalism approaches. And the Democrats seem to be more saying that they want to be tough on unfair trade. They think China presents major strategic issues, but they also seem to be saying we need world trade, we need markets, we need to be a leader in the global trading system.
Of course, the US is still firmly in the grip of coronavirus, likely to be for some months yet. But when things begin to die down a little, when do you expect the recriminations to really seriously begin? Because, of course, President Trump enjoys referring to it as the China virus. Regardless of the election outcome, there's likely to be some blowback, isn't there?
You mean against China?
Absolutely.
Well, I mean, clearly there's a lot of anger about how China handled it, but there's also a lot of anger about how Trump and the U.S. administration has handled it. And I think the main thing is, you know, I think most health professionals and a lot of political leaders realize we're going to need now some kind of global cooperation to eradicate this. We're not going to be safe in the U.S. from coronavirus unless it's eradicated everywhere around the world, unless we are successful with vaccines and other things. And that means cooperation, you know, even with China. Obviously, we have suspicion of them, but you know, that shouldn't extend to how we cooperate together on coronavirus. Being angry at them about unleashing this is not going to solve the problem.
Ambassador, just finally, we know that we have the WTO selecting their new director general, sort of coinciding with this timing of the presidential elections. What's the future of the WTO right now? I mean, some of the rules are so outdated from the 1990s, and we have seen the Trump administration easily paralyze its highest judicial body. What does the future hold? What sort of reforms does it need to survive in the 21st century?
Well, I think this is another problem Trump has, is that the hostility towards the WTO is justified in certain respects. It needs to move forward, but it's also going to take U.S. leadership to move it forward. I think the U.S., whichever one is elected president, is going to push for a reform agenda. The question becomes, are they considered trustworthy by their allies and trading partners? And this is, again, I think where Biden has the advantage, because he can start fresh with, you know, some greater trust and rapport, particularly if it brings an end to some of the fights that Trump has had with Europe, with Japan, with Korea and others. But either one of them is going to push for updating the WTO and moving it forward. In the end, it's going to take a lot of effort to figure out how the U.S. and China and other economies can all coexist in this system of rules together, and how we can push the Chinese towards a more market-oriented set of rules that we need in the WTO to expand world trade.
Korea became a global leader in sustainability, in part by supporting technologies that make green growth a seamless part of everyday life. The country continued this tradition with a Green New Deal designed to make Korea's post-pandemic economic recovery greener for people and businesses. Hyundai's Ioniq brand exemplifies this commitment by offering a personalized approach to clean mobility that makes it easier for drivers to live a green life.
In terms of user experience, we need to think about how they use the car in their lifestyle. Ioniq users value the practicality of their life.
With electric vehicles designed to fit every lifestyle, Ioniq is changing expectations of the modern car.
There have been revolutionary technology advances that changed people's lives, like computers, internet, and mobile phone. I believe the next platform that will change the human's life is the car.
What does this mean? We know that the new justice will start work immediately. So what does this practically mean for the United States?
Yeah, so there are two oaths that a Supreme Court justice has to take. She's going to take one of them in an hour or so at the White House from Justice Clarence Thomas, and then she'll take the second one in this private ceremony at the Supreme Court tomorrow, and will immediately be able to begin work. And that's important because there are a number of cases, including some having to do with the election, that are pending right now, so she may have some very fast decisions to make over the next couple days.
Greg, of course, a justice is meant to be impartial, but could Amy Coney Barrett rule along partisan lines? Is that the expectation here if it comes to debates over the fate of the election or even other important landmark cases in the U.S. like Roe versus Wade?
That is certainly the expectation. Of course, justices do surprise people once they get on the court, but conservatives and Republicans were overjoyed by this nomination. She certainly has a track record when you talk about things like abortion of being both personally opposed to abortion and having some rulings that suggested she was going to be rather skeptical of abortion rights. Less of a clear-cut track record on the election, but of course Donald Trump, when he nominated her, has been talking about the need to have 9 justices in case a big dispute over the election comes to the Supreme Court. Clearly, Donald Trump is imagining Justice Barrett voting for him.
And Greg, we have live pictures for our viewers of supporters and opponents to this nomination just outside the Supreme Court. Tell us a little bit about basically the big issues that she'll have to tackle as soon as she gets into office. We know, as you mentioned, the Obamacare arguments will be heard on November 10th, not to mention that, of course, everybody's looking at her when it comes to Roe v. Wade as well.
Yeah, and right now the Supreme Court doesn't have an abortion case, but they do have an appeal that's pending. The state of Mississippi wants the Supreme Court to hear arguments on a law that would ban abortion after 15 weeks of pregnancy, and so she may have to make a very quick decision as to whether she would like to hear that case. As I mentioned earlier, there are pending election-related fights having to do with things like when ballots have to be received by in various states, and of course we could have, if this close, another Bush v. Gore type dispute after the election that she might rule in.
Korea became a global leader in sustainability, in part by supporting technologies that make green growth a seamless part of everyday life. The country continued this tradition with a Green New Deal designed to make Korea's post-pandemic economic recovery greener for people and businesses. Hyundai's Ioniq brand
60 million Americans have voted. This is staggering, isn't it? By the way, the juxtaposition that comes to mind is Biden in front of a doorway and Trump resplendent with his backdrop. This is the divergence, isn't it, in terms of campaign presence by one and a different strategy by Biden? Is that a risk?
Well, yeah, it's Biden is trying a strategy that we really have not seen in modern times here, and part of it is informed by the virus, really. I think that, Biden is a very tactile politician. He likes shaking hands and kissing babies, and neither of those things are particularly safe when you're in your mid to upper 70s and there's a virus going on around. And so Biden's campaign has for a long time kept him in a different sort of scenario, whereas Trump wants to go out and wants to do these big spectacular rallies. He thinks that's the way that he won election in the first place, doing these big rallies, saying whatever's on his mind, and so he's all in on that strategy. I do expect Biden to travel a little bit. We're looking at Florida. We're looking at Georgia. He's been a big presence in Pennsylvania as well, some of those states. But Trump is going to travel more over this last week for sure. He's on a West Coast swing that's going to happen. There's rallies in Michigan to come, Wisconsin as well. But look, compare this to football, and I mean like the real football, not the American football. You can sort of think of it as Biden's running a campaign where he feels like he might be up 2-0, and he just needs to sort of park the bus in front of goal and go run out the clock here. Because really, Donald Trump is not just fighting Joe Biden politically, he's also fighting the clock, which is to say, when you're down a little bit in the polls, you got to turn that around, and there's not quite as much time for the president to turn this thing around.
Korea became a global leader in sustainability, in part by supporting technologies that make green growth a seamless part of everyday life. The country continued this tradition with a Green New Deal designed to make Korea's post-pandemic economic recovery greener for people and businesses. Hyundai's Ioniq brand exemplifies this commitment by offering a personalized approach to clean mobility that makes it easier for drivers to live a green life.
In terms of
We can't close up our nation, or you're not going to have a nation.
We're about to go into a dark winter, and he has no clear plan, and there's no prospect that there's going to be a vaccine available for the majority of the American people before the middle of next year.
We've been talking about what we think. Much more important, what do your undecided voters think?
They were shocked in the first 30 minutes, and Donald Trump was very different than anything that they were expecting. He was calm, he was measured, he wasn't insulting, and they were impressed. But as the debate went on, clearly Trump got agitated, he got frustrated, and he started to revert back to the Trump that they were expecting. In Joe Biden's case, they wanted more details, they wanted more answers, and they felt that Joe Biden was very good at prosecuting Donald Trump, but not good enough at explaining exactly what he's going to do. So the net of all this is essentially a tie.
It will be extraordinary to see where we are 2 days from now and even 2 weeks from now. Kevin Cirilli joins us, our chief Washington correspondent. Kevin, I got 8 zeitgeist ways to go this morning. Let me go where Mike Allen is over at Axios. I want you to overlay these 2 big stories. Your conventional politics with a pandemic that's worsening. Mr. Allen goes to Montana and Wisconsin. How does the election change across the greater North, Middle West, and Mountain states?
It doesn't. You know, just in traveling the past couple of weeks, I think that there's a very different reality in those parts of the country outside of the coast, where there's an acceptance of the virus and an acceptance of the risk that comes in terms of voting. You know, and just to note the trajectory, though, in terms of the polls and the early voting that we've seen in contrast with Democrats, you look at a state like Texas and Harris County by Houston, where Houston is, and the early voting there, the mail-in voting there has just skyrocketed. I mean, absolutely skyrocketed. I spoke with a Democratic strategist last night who said to me, the reason they're so bullish on Texas, which, you know, behind the scenes they're trying to quiet down some of the expectations, but it's Harris County. I mean, when you look at the early returns in something like Houston, and it's why Senator Kamala Harris, the Democratic vice presidential nominee, is headed to Texas, because they're thinking, all right, well, maybe we should do that. And there's a map of the early voting per state, and it's more than 6 billion upwards of in terms of how they're shattering records in a state like Texas.
Okay, but Kevin, we're all one big walking Cook political report. Cut to the chase. What did Kevin Cirilli learn about the 47 polls out there in the last 24 hours? What is your tendency, your knowledge right now?
Well, look, I think the biggest unknown, this is really what it is that the biggest unknown is whether or not the mail-in ballots it simply mean that there's blue voters. And so that's the biggest unknown. Because for as much as the president has criticized early voting, many Republicans are looking at the virus and are voting Republican, but are casting mail-in ballots for them as well. So, you know, it's hard for the pollsters and the data analysts to track whether or not early voting is going to necessarily mean Democrats. The way that they've been able to do it is by looking at traditionally Democratic-leaning parts of the states and suggesting that the early returns in those counties would mean a positive sign for Democrats.
Kevin, much has been said about the polls now and the polls back in 2016, but what we did see in the final 2 weeks of campaigning was some real momentum behind the president to close the gap right into Election Day. We don't see that right now, do we, Kevin?
Well, I think that they would say that they have it. Democrats would say that they don't. But to your point, in terms of the biggest unknown with regards to the flashback to 2016 and the Hillary Clinton emails and the letter that came out from Comey and whatnot, you know, that felt like a real a seismic jolt in the final weeks of the campaign. I will tell you that the president's campaign has seized upon some local issues such as energy policy. They are blasting that in Michigan, Wisconsin, and Pennsylvania. They feel that will be able for them to pick up votes on lost ground.
So it's not just the presidency, it's also control of the Senate very much at stake, and that's very uncertain. And actually, if you believe predicted, you could see a tightening gap there in terms of the odds that there will be this blue wave that's been increasingly priced into markets. What's your sense of this theme? Republicans say they are registering more voters, more men who are white and who have not gone to college in particular, more likely to vote red down the ballot. How much is that going to change the calculus on the Senate front?
That helps them in Florida. That helps them in North Carolina. That helps them in South Carolina as well. Whether or not you have to be, it's very hard to understand whether or not the getting people to sign up to vote is the same with voter engagement of folks that have already been brought in the 2018 cycle, because the Democrats would push back on that data and say, well, they've been able to mobilize voters ever since 2016. So these numbers are so hard because both of the political parties are operating under their own metrics and their own rubrics. So it's very difficult to understand from a comparative sense whether or not they're actually actual. In terms of the down ballot and the Senate and the blue wave, here's what I would say. Look, I mean, you look at the markets and how they've priced in and how they've started to recalibrate and associate Biden with certainty. You know, that's been quite interesting. And in terms of him being a little bit more predictable in his behavior geopolitically than President Trump, markets would view that as an asset. They would also view him much more to the center of someone like a Bernie Sanders. Beyond that, in terms of a blue wave, you know, we just don't know. And someone like a Senator Tillis, you know, I'm headed to Capitol Hill right after this. Someone like a Senator Tom Tillis, of course, there's the ACB confirmation hearing later this afternoon. All of those issues also playing, and quite honestly, playing in a mobilization effort from the left in many of the cities.
Korea became a global leader in sustainability, in part by supporting technologies that make green growth a seamless part of everyday life. The country continued this tradition with a Green New Deal designed to make Korea's post-pandemic economic.
What we're doing with Kevin Cirilli is a lot on the immediate politics. With the video that we just saw of Justice Barrett, I thought, Kevin, I'd wander through the ages here. 48, 53, 55, 65, 66, Justice Kagan, excuse me, is 60. And then we get to those older, Clarence Thomas, 72, and Justice Breyer is 82 years old. Is there any assumption here, Kevin, that a Biden presidency brings a court back towards neutrality? Or do you put some weight in this raging debate about stacking the court?
You know, it's a great point, because I think right now in these times we essentially had always been used to traditionally conservative or liberal Supreme Court judges, and so I think now though there's almost three camps on the Supreme Court. You've got the left, the right, and the middle is really going to be what moves the needle on incredibly important cases.
Who is the middle?
Well,
who is the Anthony Kennedy right now?
I think that depends on who you ask, but I think to some extent you could argue anything I say. I think there are some scholars who would suggest someone like a Gorsuch is more to the middle right now and is an incredibly important vote. But on the Affordable Care Act case that's coming up in the week following the election, I think then we're really going to have a new understanding of the makeup of the court. But that image, if you're looking at it on the front pages of your newspapers this morning, or if you're watching via television right now, to see the president with an African American Supreme Court justice, and of course Amy Coney Barrett as a female, that's the image in 1 week from an election that Republicans are hoping will carry the swing vote or push turnout in suburbs and remind Republicans who are very apprehensive of the president's rhetoric, of the president's approach to politics, in terms of what he is capable of delivering. It's a calculation, but it's an image that Republicans feel is something that, quite honestly, is probably more beneficial to them than that first presidential debate.
I look, Kevin, at the moment that we're in. Does any of the talk you just had play into the election? To me, they're two discrete things. Am I right?
Well, I don't know, Tom, because I think when you can't look at any of this through a vacuum. And I think if you look at the latest polls, which show Florida with a neck-and-neck, razor-thin toss-up state, a key battleground state. If you look at how Democrats are looking to expand the map, they're looking to finally turn Texas blue. You look at what's going on in the Carolinas. I don't think we have any really good idea yet in terms of what's going to happen. The president's going to be bulldozing through battleground states, holding 3 rallies yesterday in battleground state of Pennsylvania. He's going to be holding up to 6 rallies a day. This is the same playbook that he used back in 2016. Joe Biden taking a much different approach, trying to be much more consistent in terms of his messaging. He feels that less is more. According to the sources that I talk with on the Biden re-election campaign, they feel that they're in a strong position. However, they're still anxious to have a repeat of 2016.
I keep bringing this up, Kevin. I get it's the strategy. Keep the spotlight on the president. The one thing he doesn't want to talk about, COVID. It's the one thing everybody's still talking about. But in the final week of campaigning, don't you think the former VP needs to be a little bit more visible?
You know, I think it's a great point, Jonathan. And I think whenever the results of this election are determined, I think that they will either be called political masterminds or they will be called that they fumbled a massive political campaign. And I just think it's the risk that they are taking. But it is without question a massive political risk. I mean, you couldn't have more of 2 contrasting candidates. And I'm not talking about President Trump. I'm talking about vice presidential nominee Kamala Harris and Democratic presidential nominee Joe Biden, in terms of just how much you've got Harris, who loves being on the campaign trail, loves campaigning, wants to be out there, and Joe Biden, who has taken a much different approach. It is, I think, his legacy in his decades-long career as a politician, who he is now as a politician is not who he was, in the sense that he's not that retail politician that we saw, for decades, Lisa.
Kevin, in the meantime, senators all went home. We were talking about talks about fiscal support. We are no longer talking about talks about fiscal support. Everyone's just going home. What gives?
Well, yesterday I was on Capitol Hill and I spoke with Senator Kevin Cramer. He's a Republican from North Dakota. And he said, Kev, I always said lame duck session is when the stimulus is going to happen. I rolled my eyes. I said, Senator, you folks were a little more optimistic in the drum up. But look, I mean, he actually made a key point here that I think if you're outside of Washington or you're waking up this morning and you're trying to figure out or price in where the fiscal stimulus is headed, he said the election, get this, the election results will inform not the first quarter negotiations, Lisa, but the lame duck negotiations. So that's a fascinating nuance in terms of how the fiscal stimulus could be informed of who has leverage in the month of December when there is stimulus. And if it's Republicans, it's going to be a much smaller price tag. But even if it's Democrats, I think that they would be willing to pass a short-term, a smaller deal, and then if Biden wins, pass a massive massive amount in the first quarter of next year.
Korea became a global leader in sustainability, in part by supporting technologies that make green.
I want to begin today by discussing an issue of existential importance to Pennsylvania, very, very important. Last week, sleepy Joe Biden made perhaps the most shocking admission ever uttered in the history of presidential debates. In other words, he blew it. On live television, 91-9. Did you see that? 91. Did you know what that means? 91-9. But we won't talk about that in front of the fake news. Joe Biden confirmed his plan to abolish the entire U.S. oil industry. That means no fracking, no jobs, no energy for Pennsylvania families, Texas, all the other places. He wants to go wind. Let's go wind. Let's go have brownouts, blackouts all over Pennsylvania, all over the country. He wants to go wind. He wants to go with windmills that are made in Germany and China. The Biden energy shutdown would inflict deep pain and misery on Pennsylvania, mass layoffs, constant blackouts and brownouts, soaring gas prices. Nice to have that $2 gasoline, isn't it? Surging energy bills, no air conditioning in the summer, no heat during the winter.
When the coronavirus pandemic delivered a sudden shock to the U.S. economy, the Federal Reserve rushed in to provide immediate support.
We will continue to use these powers forcefully, proactively, and aggressively until we're confident that we are solidly on the road to recovery.
Money flooded into debt markets, but it hasn't flowed equally to everyone.
There's certainly a large part of the economy that's not being seen by the banking system.
Capital has been easy to come by for larger companies, while many small businesses have struggled to stay afloat.
I mean, I'm here in Times Square in Manhattan, and there are lots of businesses around me that haven't reopened.
Small businesses, they're in for a world of hurt.
And consumers are watching anxiously as lenders pull back.
That's where you're seeing a lot of this uncertainty from the banks, because they just don't know what's coming.
Welcome to 2020, Year of Crisis, the credit disconnect. I'm Shanali Basak. Months into the pandemic, corporate America has maintained easy access to financing, but small businesses and consumers are finding it hard to get loans. There are signs that it may only get harder. It's become clear that extraordinary actions taken by the Federal Reserve and central banks around the world are not reaching large portions of the economy. Why is this happening? And how will this disconnect shape the broader economic recovery? I spoke with leaders of three of the world's biggest credit businesses: Blackstone's Dwight Scott, Jim Zelter of Apollo, and Guggenheim's Scott Minerd. They all agree the market is leaving smaller players behind.
I think the disconnect is simply because access to capital has a direct correlation to how large you are as a business. There is no doubt about that. That's always been true. That continues to be true. And so the smaller businesses are having a harder time finding access to capital.
You have many, many companies, and virtually every industry gets hit. We've had real winners and losers. If you are in the, we know it's been well documented, those companies that have benefited, whether it's online or digital or supermarket chains, there's been, it's been very unequal in terms of the winners and losers. And again, for an investor, that's the dispersion opportunity. But when you really take the economic lens, it means it's an unequal and to some degree an unfair recovery.
There's certainly a large part of the economy that's not being seen by the banking system. And that has been an issue for Chairman Powell and other members of the Federal Reserve because, getting money or capital into inner city communities, minority business, is nowhere similar to the levels that get to other sectors of the economy.
The statistics tell a grim story. the number of small businesses in the U.S. has declined by almost 25%. The New York Fed said in August that money from government programs is simply not reaching the hardest hit areas, as Black-owned businesses were almost twice as likely to shutter. Women-owned businesses were also disproportionately hit. In fact, the government has made a lot of money available, but it hasn't always gone to where it's most needed. Since the Fed put credit backstops in place, investors have put their faith in large, safe companies. Firms issued a record $1.6 trillion of investment-grade debt through mid-October. Even high-yield companies and leveraged loans, which are riskier, have raised more than $600 billion. Meanwhile, the government's Paycheck Protection Program made more than $660 billion of forgivable loans available to help smaller companies. But by August, the National Federation of Independent Business found that most borrowers had used up their PPP loans, and about half of them would likely need more aid. 1 in 5 business owners told the group that they would have to shut if economic conditions didn't improve. As for the Fed's efforts to support Main Street, through September, the central bank had dispersed just $2.6 billion in loans to small and medium-sized businesses. Loan officers at the large banks identified several roadblocks to the Fed. Potential borrowers were already too indebted. Many were in poor financial condition before the COVID-19 crisis. And many were too severely impacted by the crisis to remain viable. Even more troubling for businesses in urgent need of credit, banks are tightening conditions on loans to smaller firms at a pace not seen since the financial crisis. What's more is that many underserved communities have very little banking penetration. Sheila Bair oversaw the Federal Deposit Insurance Corporation during the 2008 financial crisis. She says the system isn't equipped to get funds from the Fed to those hardest hit by the pandemic.
The Fed's tools are really brutally efficient when it comes to pumping money into financial markets and capital markets in particular. We're seeing those markets have been doing very well, but small businesses and households have to go to banks to borrow. And so banks have to be their transmission mechanism. And on that score, we're not doing so well. And we saw this trend during the great financial crisis, too, that there was a pullback, contraction in credit, especially for small businesses. You're seeing a bigger chasm between access to credit for those who can access public debt and equity markets, and those that have to rely on bank credit are getting more and more distressed.
U.S. companies filed for bankruptcy at the fastest pace on record in the third quarter of 2020. Smaller companies tended to go bust even more rapidly. Since small businesses accounted for 2/3 of the new job creation in the U.S. over the past 15 years, this trend threatens to stop the economic recovery in its tracks. Houlihan Lokey is one of the largest restructuring advisors in the world, and their bankers see trouble spanning all the way out into 2022.
Look, this is a global phenomenon that we're looking at because all countries are going through some variant of this. Obviously, certain countries have done better with the virus than others, but I can tell you in the March, April, and May timeframe, we were substantially busier on the restructuring side than we were during the global financial crisis. Not even close.
How do you describe how unequal it will be as things start to come back?
Well, certainly the larger companies have more options with respect to liquidity and capital market alternatives. And the smaller companies are struggling more. Small businesses, they're in for a world of hurt. They don't have, anytime you have a business that's smaller, there's less ability to tolerate downturns towards your business, within your business. So, and we're seeing that play out. It is a situation, and it's one of the reasons why I think there is this push for additional fiscal action here by the government, because it's a very uncertain time still for a lot of small businesses.
Banks and the largest credit managers are factoring in all of these uncertainties. Coming up, how will companies find the capital to make it through the next wave of this crisis?
No one wants to lend to a business that really you have no guarantee that it will exist in 12 months.
This is Bloomberg.
Just give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Welcome back to this Bloomberg special report, The Credit Disconnect. I'm Shonali Bassick. Small businesses across the country have voiced difficulties in getting small business loans, even as part of the first wave of government aid. Bloomberg reporter Sally Bakewell has heard many of their stories.
It's really heartbreaking. It ranges from just red tape, not being able to fathom the application, not being able to fathom the application for forgiveness of a loan. So one of these programs, the Paycheck Protection Program, it actually said that if you use the money for payroll, you would get that amount forgiven. But that has been like a complex calculus for a lot of these businesses. So they were put in this terrible position of, in order to keep a loan, they had to keep their staff, but that required that all the money went towards their staff, then it ran out. And what could they do? Nothing.
When you talk to the banking industry, when you talk to bankers, what do they say about the way they're able to provide loans to their clients?
I think a lot of them were concerned about the risk because, and that is an absolutely fair concern to have. No one wants to lend to a business that really you have no guarantee that it will exist in 12 months.
The PPP program did help millions of businesses stay afloat, and the economic damage would have been way worse without it. Some banks are optimistic about the future. Goldman is more constructive about the economy, saying companies are becoming more confident. But there are many big investors who foresee a slower recovery.
It really is directly dependent on when a vaccine comes into the system and what impact that has to reopening the economy. So it's hard to make those estimates today as we sit here. We are optimistic about the timing of a vaccine and the impact of a vaccine, yet we're concerned that we can't time that exactly correctly. So we would say 2021, 22, probably into 22 before you see a full recovery back to where you were in 2019 or earlier this year.
Many companies were in a rush for liquidity and they added a lot of debt on to make sure they got through the troubled period. But when they turn around in 21 and 22, they'll find themselves having just way too much debt for considering the revenue and earnings of that company's capability. So I suspect you would see higher defaults, probably not in 20, but as we're getting into the second, third, and fourth quarter of 21, I would suspect you would see some of those.
The companies that won't make it are the companies that really were in secular decline. And that secular decline may be accelerated by the rapid adoption of technology during this pandemic. There are a lot of companies, obviously, which have been benefited incredibly in the technology sector and related sectors by what's happened over the last 7, 8 months. But there are other companies that obviously will be negatively impacted. And so if you have a company that basically is a good, viable business, but the business has been disrupted by the pandemic, that business should survive. It may have to go through a liability management exercise. It may need to go through a restructuring. It may even need to go through a bankruptcy. But those are good, viable businesses. The issue is really, is this a business that is in secular decline, which is accelerated by the pandemic?
Some investors believe that no amount of stimulus money will be enough to last into 2022. And at the same time, the Fed's Main Street lending program had very little uptake.
When you look at how the Main Street lending program was designed, the banks are, sitting in the first loss position, and they have to absorb, a lot of losses if something goes wrong. But yet at the same time, they can't use nor are they going to be capable of the underwriting standards that are necessary to make good loans. So I can understand why, you know, the banks aren't having a lot of success with this program because they're guarding their capital.
They're not using it. They can't take 5% of the risk. I mean, they only need to take 5% of the risk to underwrite these loans, and they still won't do it. And it's amazing to me because, you know, they're still paying dividends. They're bragging about how well capitalized they are. Jamie Dimon, for heaven's sakes, was saying maybe they could, you know, this is a couple months ago, he said maybe they could start buybacks in the fourth quarter. So they've got all this capital, but they can't take 5% of the risk on a Main Street loan. So I don't get that. I really don't understand it.
Many banks shed their riskiest clients after 2008. Even so, this year, the largest U.S. banks have collectively put aside almost $60 billion in provisions for bad loans, the most since the financial crisis. Loan officers have said they're ready to tighten consumer lending. That's as the unemployment rate remains high, and large corporations across industries, including Disney, Chevron, and United Airlines, have announced plans to cut thousands more jobs. Bloomberg reporter Jenny Serrain has broken a lot of the news regarding credit pullbacks, and she says bankers are concerned about a bigger climb in white-collar unemployment.
You know, historically, as unemployment has risen, charge-offs have kind of moved in lockstep with that. We haven't quite seen that in this instance, and so I think that's where you're seeing a lot of this uncertainty from the banks, because they just don't know what's coming. They're seeing all of their historical relationships and trends completely break down, and so they're acting with a real strong note of caution.
Roger Hochschild, the CEO of Discover, says his firm started to rein in risk years ago.
For much of our base, the prime consumers, they're hanging in there. You know, the last numbers we reported, delinquencies, people behind on their cards were lower than the same time in the prior year, which I think is stunning. On the other hand, there are huge segments of the economy that are really struggling. The consumer has held up surprisingly well so far. I think it shows just the resilience of the U.S. economy and quite frankly, the U.S. worker and consumer, but they can't keep it going forever.
Consumer units have tended to be profitable for the banks, with average annual percentage rates hanging around 15% for credit cards. Corporations, by comparison, have been raising money at record low interest rates. It can be more expensive for small businesses and consumers to borrow. In the heat of the pandemic, consumer businesses have faced major declines at the biggest banks this year, while Wall Street businesses hit records. The disparity between Wall Street businesses and their Main Street units have caused many to ask, are the banks doing enough for their smaller clients? And is the Fed doing enough to force them? Coming up, why some think the Fed could be using its tools to shape a more equitable recovery.
The Federal Reserve has had a blind spot about relying only on monetary policy to stabilize the economy.
This is Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm Sonali Basak. Welcome back to a Bloomberg Special Report, 2020 Year of Crisis, the Credit Disconnect. As evidence mounts that the Fed's support has not reached many parts of the economy, unrest is mounting as well.
People will notice when they start seeing their small businesses closing. We've already seen that. There was a protest in Minneapolis where the protest marched by the Federal Reserve there, and they lay down there for 1 minute silently. We have to pay close attention to things like that. They chose to take their protest by the Federal Reserve. And I spoke to some of the protesters there, and they said, we are seeing small businesses close. The assistance is unequal.
It's also become clear that not all companies have used their funding from the Fed to save jobs. Sheila Bair believes the aid should have come with stricter rules for corporations.
By just providing this broad, backstop to the secondary market, there really were no strings attached. So you've seen a lot of the beneficiaries directly and indirectly of Fed interventions and with the corporate debt markets they're still doing buybacks, they're still doing dividends, they're pursuing M&A. It's hard to see that much of that money is flowing into job creation or job preservation. So I think they could have been more targeted and surgical on their corporate debt interventions.
Meanwhile, the jobless rate remains elevated, and black workers are unemployed at a much higher rate than white workers. As inequalities widen, big banks like Bank of America have launched initiatives to get more capital to minority communities through black-owned banks. JP Morgan made a $30 billion pledge that included lending to black-owned companies. Citigroup made a $1 billion pledge, and chief economist Catherine Mann estimates that the failure to support minority communities has cost the U.S. economy $16 trillion in lost output.
It's lost spending power that could go to make a bigger pie, and then companies can compete for that bigger pie. It represents lost wealth, which if you're in the financial industry, you like to manage wealth. So when we put that number out there, we're talking about lost opportunity and a smaller pie. Each entrepreneur, not only do they do good for themselves through raising income, having a profile of a business, but entrepreneurs have an ecosystem around them that raises the boats of those around them as well. So those who work for entrepreneurs, they are better off. So the spillover benefits of supporting entrepreneurs through the financial sector, including places where they may not have access to credit because you don't know them so well, that this is important ingredient in supporting that entrepreneurial class.
The big banks are taking at least some steps to get capital where it's urgently needed. What can the central bank do? Dallas Fed President Robert Kaplan told Bloomberg it's not a simple question to answer.
The problem is this: the Fed has a lot of tools and we have more things we can do, but our tools primarily ease financial conditions. They make it easier to borrow money. Our tools are not well suited when you have an income loss. I think the Fed can do more, and I'm sure we will look at all our options, but those aren't substitutes for fiscal policy.
Some experts insist the Fed could do more to encourage or force banks to lend. Former Fed economist Claudia Sahm is one of them. She thinks the Community Reinvestment Act could be deployed to spread capital across the economy.
The Federal Reserve, among other bank regulators in the United States, has the Community Reinvestment Act. They could issue rules that incentivize banks even more to do lending in low-income communities to minority-owned businesses. The Federal Reserve has had a blind spot about relying only on monetary policy to stabilize the economy. They have those tools right now. The other thing, and I do think this would probably require some light touch from Congress, is to go back in and get the Main Street lending facility and the municipal lending facility working in a way that they get low cost, long-term loans out to the communities and the medium-sized businesses that need it.
We should rethink CRA. These big banks just don't have that much interest in, they put a lot of press releases and have some smaller programs, but just requiring as part of their CRA obligations that they actually support some of the CDFIs, the community institutions that lend into these neighborhoods, might be one approach that we can try to use to stem this direction we're going, with further consolidation, further dominance of the very largest banks that typically don't do as good a job as small banks in lending to small businesses and households.
The heads of the largest banks are pressing for more stimulus to keep the smallest firms alive. Morgan Stanley Chairman and CEO James Gorman is well aware the economy is not out of the woods.
I mean, I'm here in Times Square in Manhattan, and there are lots of businesses around me that haven't reopened. That's where the pain is. That's why we need continued fiscal support from this government and other governments around the world. I go back to if you've got consumers who are paying their bills, who have some money for consumption, some money for savings, everything starts working.
I think we will close for today.
The pandemic has already exposed a dangerous
As you can see
disconnect
here,
access to credit. And if the situation persists,
we have a nice up. These two will remain. This one, we will let this trade open till it hit this 1.07 level. Oh, sorry. This one till it hit 1.5 level, 5.5. The New Zealand Canadian dollar is still holding this level, but it will go down eventually. Okay, see you on the next live trading. Hope you enjoy it. Have a nice day. Bye bye.
Very likely to be a decoupling between the United States and China.
I think the reality is this is highly unusual.
This is a really good example of the intersection of business and government.
Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.